Welcome, friends and traders, in this quick demonstration of 369 forecast toolset. We're looking at two different tools. Here on the bottom, we have Vortex flow oscillator, which is giving us the power of buyers and sellers. We have these energy bands, and we have what we call 1189 pricing model. On the left side, we have taken dollar tick, which is the instrument on thinkorswim, and we put a RSI on this. You can adjust it, and we have advancing declining issues, and then we have volume going into SP, so S&P. So what we are going to do right now is look at the situation where we are at the extremes of the ticks and at the 8911 model space as predicted by this. And we're also looking at the exhaustion. Now this is the downward momentum volume, which is Vortex flow oscillator, we call it. It is using Vortex mathematics and applying buyers and sellers sentiment on it. So what are we looking at here is before the market opens and close, we can see some flow is operating. And when the market opens, they are going to flush and take a bias. And these biases can be pretty much picked up in the right spot at the right time. So here we had a minus 1034. 1034 reading minus 1158. It went down to this low extreme where market was right here. Look at the right side cursor. It is hitting the 1189 targets, overlapping targets. And look at this volume of buyers and sellers as seen through the lens of Vortex flow. Got the extremes. All right, so what we are looking at is when we reach this volume above this white line, we are looking at some kind of a reversal. For example, it happened here. All right, but there was no structure put in place here for support except for this guy. So at this point, we got that the pressure is going to be extremely down. These are the extreme levels at the level. All right, so what are we doing? Why is this not good enough? It is good, but not good enough for a small impulse. But look at the ticks on the left side. They're on minus 600. So early morning, before, not at the beginning of the market, you can pick that also. Market opens at the ticks. So look at the opening ticks on Friday, whenever this day is. We can see what day is it on the top. On the 3rd last week, right? Okay. So anyway, we market opened at a very high, strong uptick. Momentum was extremely high. That means all the stocks opened up pretty much bullish here and to the top side. And then typically you will see many times that this is going to give us the pushback down. All right. Now remember, this is NQ. Tick is mostly used by an ES, but they'll work still because Nasdaq 100 still has some overlapping components. Then I went to the top. Okay, and then this is where we really found some exciting flush. And this is at the extreme. And this is to the low bottom. We had a beautiful flush on 1189. And this was the bottom of the day. All right, let's take one more example. We got the story. Let's look at this guy. Let's see what we get on the ticks. So we could try to combine the ticks. And here we have the situation where market opened on Monday. Again, it opened on the high tick and just went down. You can just see this, right? When the overnight jumps happened since Friday, and this is Monday. So I think Friday there was a gap open most likely. That's why the ticks opened up here. And then it flushed down. So the early morning, sometimes you will catch this. You should be able to catch it. And then you see the flow, vortex oscillator flow is bearish until it reached this spot right here, 1189. All right. Now what we want to see is the oscillations over the ticks. The ticks are not matching here. See, the ticks are on bullish front, and this is now. So let's see if we found any extreme ticks here on that day or not. Maybe there's no flush like what we saw. Okay, it's not. Here we have this extreme bull on the green, which you can see here, green, 1189 model. This went above the white line. So this was, I think the best trade was right there itself in the morning. You get used to it. And that was 8 o'clock before the market opened, and comes down and goes back here. And this is when it went up here. We're touching these flow bands, and look at the oscillation on the dollar tick we see. It is saying, hey, you can take a shot again. And it was on this 89 level as well. So, and it goes. Now then we could have stayed here until it reached this extreme vortex flow, which is right here. And then you got the bullish momentum, and then same thing goes on and on. So every day you should be able to pick one day's high on the 2 o'clock. Now this is where you can see this one, ticks are moving up, NQ is not doing anything, so you have to be cautious about it. There's also tick/Q, you can look at that as well. All right, so tick/Q, if you look at this, tick/Q, and you can see this rotates in different levels, okay, and then what is happening here? Now in this example, if you want to use this just for NQ, not the entire market, but you will see some things are working differently on both cases. But here the market open exactly same as tick and tick-Q, because remember they are common. Apple is on both sides, right? So is Microsoft and things like that, and so is Oracle. They're part of S&P, they're part of NYSE, right? So NYSE is tick, and mostly people, because S&P 500 stocks strongly correlate with NYSE up and down ticks, so that dollar tick is useful. /Q is going to be exclusively for NASDAQ 100 ticks, and you can have a look. So even this guy is going down, and Q is still moving up, right? So this is going down, it's still going up. So it is having the same behavior, because remember this is up and down tick collected for that 100 shares or 500 shares. There's nothing to do with the futures. That's what we are trying to get to. So hopefully it makes sense. This is why we have to combine this, wait for the extreme conditions, and then be smart about it, and don't just blindly take it. Okay, so let's see. Okay, now even today, so let's see what day is it. So you are getting the points here. Let's look at this guy. Okay, so market went up to 400. Now on the bottom side it made 1000 here, it made 1000 here. Now you look at this. Now this is also what we call as a tick divergence. All right, tick divergence. What does that mean? Well, if you look at this two, they're both at 10, around 1100, minus 10, let's say minus 1000 here, minus 1000 here. Well, look at the price. So there's some strength in the market. Now you can look at intermarket divergence. We can talk about it next time. You can also look at intermarket tick divergence. You can look at a lot of things. But what are we looking for is, in this example, look at this. Ticks made, same thing. Sometimes we'll just punch it right there and just moved as we saw earlier. Sometimes it doesn't. So just cannot rely on the tick alone. But when we opened the market, we opened it right here. It had to be opening on the extremes. It did not get to any extremes anytime soon. So here, no trade here, but you can just see the trend is bearish, 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 and then it got exhausted eventually at this point. and it gets to 2000, 1500 or higher, which you can see here it is. I want to get rid of that. 2500, and it is on 1189 model. That's the one thing. Exhaustion is coming in, and I'm looking at the tick is on the bottom side, lower side is minus 800, 900. Now all things come together. That is the trade we're looking for. Don't take it blindly, highs and lows. Now this divergence is there. If you're taking this and say, hey, this one looks okay to me, you got something, and then a small rally. Got 40, 50 points. Let's say you are 25. Let's say you want to have a stop loss of 20 and go 1 to 1, then you got 1 to 1. This one happened. Now this one happened. Now here's the thing. When this was going on, the market ticks was saying, hey, there's some market is going to be holding. Some ticks were on the bullish side. That means there are 500 up stocks, then net up stocks right here, right? That's the best way of saying it. And then it comes down again, rotation big time, and you can see market is doing. Now if you see the Vortex volume, buy and sell, Vortex volume is also dried down. You see that? Here it was going up, the market was going down. Now what we call this is, let's not get into too many things. Excuse me, this was going down, it went up. See that? Okay. Because it was getting strong, bids were hit very aggressively. When the bids are being aggressively hit, market is going down. So right here. So buy low, sell high, so we're hitting the buy low. We're hitting the bids right there. And then if we didn't have an extreme, we got the sellers disappeared. See that? Now this is what you have to see. Sellers are going. Okay, the bids were hitting hard, bids were getting hit hard, market came down, hit hard, went down, divergence. Look at this. The sellers are no longer aggressive, and we got a divergence, and this is a divergence between the ticks right here. All right, and then how about AD? Well, AD is just overall accumulation distribution going on in what side. So we have this moving average put in place, and this is where it says, okay, you can continue to go long. Again, it starts from, you can go short below this line, right? But again, anytime you try to use buying and selling just based on moving average, be cautious about it, what's going to happen. So you put the systems together, you can say buyers are coming, buyers are gone. Now if you just look at this guy, compare the same things here. Look at that, see that? The selling pressure has dried down on the second. This is what we call as a V structure push up right here. V structure right here. Boom. We made double bottom with the loss of momentum of volume. Here we are tracking bid and ask through vortex flows. The flow going down, dried out. Now if you look at this, same thing happened here, right? Market was attempting to go down. Well, there was no follow-up. This was a clear divergence. And we had our 89 sitting here. I hope this helped understanding a little bit of ADD and ticks. If you just go to ADD for that sake of ADD, this day, now you can see, right? He said, oh, the market is below this, but look at why is NQ going up? You got that? All right, that's the problem with these indexes. Market was telling us it might be showing up some bullish strength. Okay, all right, and it did. And here is the thing actually that moved it is this, the buyers coming in, right? There we go, boom, on NQ. So you cannot say, okay, above this it will be so easy. Anything becomes too easy, it doesn't work in the market, unfortunately. Right, you can keep this in context. This is just giving us the bias where accumulation distribution taking place. This is where the extremes are. And look for the extremes, and when the extremes are there, look for divergences. Ultimately, the main power of this demonstration is this tool, Vortex Flow Oscillator. Boom. Goes to 2000, 3000, pulls back. All right. And then it was a drift up, you can see, no seller. All drift, small sellers attempted to come here, all buyers only. That hitting and drifting, rotational drift is going on and on and on and on and on and on. All right, friends and traders, that's all we wanted to discuss with you on this. Thank you.